Hello everyone, K Kim here, and welcome to today's market update. This will be a midday report. As I record this video, market is still open, and so you will see flashing lights on your left. It just means market is open. I just wanted to do again another quick follow-up video to my previous market update video I've done 2 days ago on quick thoughts on S&P 500 index. Let's actually look at daily chart first, and then I'll go to the 65-minute chart and look at the minor term. But for now, let's look at this intermediate term there. So we've been talking a lot about this rising 100 SMA there, and so many times, we shouldn't be too quick to judge that just because it gets below the 100 SMA doesn't mean that this thing ready to completely roll over. And so obviously, as long as we're dealing with the rising 100 SMA, the intermediate term and the primary term sentiment is still considered bullish, and we talked about that on our actually video lesson I've done. I think it was a video lesson 1 on the moving average. So if you haven't watched it, go and watch it and see how you can take advantage of these or understand these moving averages to your trading. So obviously we also talked about the important level of 21-ish level. I mean, this whole vicinity is very, very important level there. Obviously 2100, 2120, this whole band of support. We've been talking about this level for quite some time, and this is a reason why technical analysis is very, very important to you, because how are you gonna able to know your reference point? How are you gonna able to know which level you could possibly find support resistance without technical perspective, right? So this was a level, important level here. This is the reason why, even though we saw a pretty sharp breakdown on, what was it, Friday? Wednesday, we saw some buyers there in that vicinity, kind of supporting that vicinity, kind of protecting this vicinity right here. We do have this long high wave spinning top doji type of candle there. And so we got last 3 days, we have some type of morning star reversal formation. It hasn't confirmed yet. We will need to see a move above this vicinity here. So we have we have that gap down action. We got gap up action. Those gaps were filled quickly. We kind of have this maybe even island reversal type of pressure, bullish pressure rather, with with the morning star reversal patterns here last 3 days. But again, they need to be confirmed. So how can we identify confirmation going into next week? Let's look at a 65-minute chart. I think we can get a better idea on identifying the confirmation here. Let's get rid of that 100 SMA there. So obviously, looking at 65-minute chart, something that I always talk a lot about is this market's a master of shenanigan. This market's a master of traps, head fakes. Okay, what I mean by that is this. That's what it does. We hold this was back in late July. We hold this level for quite some time. We finally break below, and all the bears are chanting, this thing is going to crash. They're talking about Black Monday. They're bringing all this different data that will just support their ideas, the bearish ideas, and then it traps them. It traps the sellers here. It not only traps the sellers, it also traps the buyers. Why? Because their stops are taken out, and then it thrusts higher. What does it do? Well, it finally gets above the resistance, and then people will be like, yes. So this is where all the shorts are covering, and they're short, they're short positions, stops are getting taken out, and then people are going long. People who finally, oh my god, I'm sick and tired of this. So then they got rid of their shorts. So maybe they were bearish here, and then they went long here, and then they got how many times have you guys done that? You went short here and you got burned. You went long there and you got burned, right? This is the math. This is how this market works. Same thing happening here. We finally get below this support, right? even slightly getting below this support. You see that wick right there, right? Look at these levels. This is a reason why just understanding minor term sentiment is not enough. You must understand a big picture. So anyway, so that's how this market operates. Stops are getting taken out, the shorts are getting burned in that vicinity, and then this thing just goes right back up. And where we come back to, this is a level that we've been talking about here. This is a 2140-ish level. This is old support currently becoming new resistance, you see. So currently we went up, we came down. There's a video lesson I've done on inverted head and shoulder formation. That's a lesson 5 I've done. Go ahead and watch, then you can learn more about this. But this is important pivot, okay? This is important pivot going into next week. Very important pivot here, 2140, 2150-ish level, old support, new resistance vicinity, right? So this is what? This could be the potential left shoulder. This could be that head. This vicinity could be that right shoulder. And what is this then? This is a neckline, okay? Neckline. So we got this old support becoming a new resistance and also acting as a neckline. What does that mean? That's an important level of pivot. So remember we talked about on the daily chart, we talked about if that Morningstar reversal needs to be confirmed or to identify confirmation. And we talked about let's go to 65-minute chart and to possibly figure that out. This is it. This is it. This is at 2150, 2140, the whole vicinity of 2150. If this thing is able to get, maybe towards the end of the day, I'm not sure. Again, market is still open. It still will be open 2 more hours. This is going to be a midday report. So I'm going to talk about how we made. Let's say we are seeing a little bit of buyer here. If this thing continues higher, breaks above this neckline at 2150, and then towards the end of the day, if we stay above it, well above 2150, then there's a good chance next week, at least early next week, we'll come and fill this gap at 2164. Okay, that gap fill will act as resistance, so we'll probably see a pullback then. But let's say if this thing does go up but was not, the way I think though is that I think it's probably not gonna break above it. It's probably going to get up here and then will probably fizzle around below 2150. That's what this market does. It's gonna constantly get you to worry and constantly let you to guess and what's gonna happen and be anxious and nervous and what's gonna happen next week. There's nothing to be worried about if you understand a big picture. But because I think this is where a lot of bulls and bears are going to look at and like, oh, what's gonna happen is that buyers are going to see some success getting above this level, or is the sellers, you're gonna pressure this thing down and then make another low. So this is a level that a lot of short-term day traders are going to look. So I think we're just gonna probably fizzle around here below this vicinity at 2150 and 2140. And so going into next week here, if this thing does able to get above this level, and we need to close above it, not just get above it, not just get above it in an intraday, because you know what, how many times you've seen this thing does look something like this in an intraday, and then towards the end of the day you see something like that, right? So this is the reason why you want to see a close towards end of the day. If we can have to see a close when the market closes, this thing gets above it early next week, make sure we hold at 2148, 2140, 50-ish level. There's a great chance it'll come and fill that gap at 2160. And that's kind of what I'm looking at here right now though, is that potentially that inverted head and shoulder playing out, and possibly that that Morningstar reversal could play out there. Last 3 days we have that Morningstar reversal type of candle there just hanging around. If this turns out to be a bear flag, something like that, and then we continue lower, and that's what bears would love to see, then next level of stop, next level of support is 2100. And 2100 I've been talking about quite some time, which I believe will act as strong support. 2100 would probably, which would act as strong support. And we're currently kind of in this support. Remember I said always draw your trend lines with a band of support, not to be so precise at it, but just give it some room here. So I think 2100 in that vicinity, if should the price continues lower here next week, if this thing turns out to be some kind of a bear flag. As of today, I don't know. So if we get the rejection on that neckline, which is right here, and if this thing continues lower in this fashion and continues to cultivate lower highs, then that would be it's gonna look more like bear flag in the daily chart. But if this thing gets above 2150 going into next week, then it's gonna look more like a minor term invert head and shoulder formation, and that would confirm anywhere above 2150 and close above it will confirm that and to fill this gap. There you have it, midday report. Have a great weekend. Next week, we'll do another market update and give you guys, let you guys know how things have progressed. Talk to you guys.